Hello, good day, guys. My name is Nick, technical analyst for SuperForex. Today, we are looking at the analysis on the currency pair AUD USD, and first we'll be talking about fundamentals before we move right down to technicals, which is purely what we'll be seeing on the chart. Now we can see that our AUD USD drifts lower for the second straight day and retreats further from a multi-week high. The Fed's hawkish outlook remains supportive of rising US bond yields and underpins the USD as a soft stone for the benefits the safe haven block and contributes to the intraday decline. The AUD USD pair extends the previous day's sharp retracement, slide from a nearly 3-week high, levels just above the 0.6500 psychological mark, and continues drifting lower for the second straight day on Thursday, and the downtrend trajectory drags spot prices to over 1-week low, around 0.6400 round figure during the early European session, and is sponsored by the underlying strong bullish sentiment surrounding the US dollar. Now, the USD index DXY, which tracks the greenback against the basket of currency, jumps back closer to a more than 6-month top touched last week, and remains well supported by the Fed's reserve after a hawkish outlook, as was expected. Now, the US Central Bank has decided to keep our interest rates unchanged at a 22-year high between 5.25 to 5.5%. And at the end of a 2-day policy meeting, in their accompanying statement, the Fed warned that sticky inflation was likely to attract at least one more interest rate hike in 2023, and reiterated a higher for longer narrative. In the so-called dot pilot, policymakers have maintained the forecasts for rates to peak between 5.5% to 5.75% by the end of this year, and now see the benchmark rate at 5.1% next year, suggesting just 2 rate cuts in 2024 as compared to 4 projected previously. The hawkish outlook triggers a fresh wave of selling in the US fixed income market, pushing the yield on the rate-sensitive 2-year government bond. The benchmark 10-year US Treasury yield rallies to a 16-year peak and continues to underpin the greenback. Now, what to expect from this technically? We have been seeing a drop down since yesterday for AUD USD pairs, and it broke out of a very important support zone, and we only have a few high impact news today. And of course, the USD happens not to be one of these news events, but we have an unemployment claim by 130, and also a Philly Fed manufacturing index, a medium impact, also by 130. And this, of course, might drive a bit lower down to the 0.63 axis. And a good entry from this point for sell will mean that we are looking at up to 40 pips on that entry point, of course, which is good money. And that's our technical analysis on today's currency pair, AUD USD. Now let's move over to the stock markets. Hello, welcome back, guys. And on today's stock market, we'll be having a look at Caterpillar. And how is the market feeling about Caterpillar so far? We are seeing that Caterpillar's short percent of float has fallen 3.68%. Since its last report, the company recently reported that it has 6.68 million shares sold short, which is 1.31% of all regular shares that are available for trading. Based on its trading volume, it would take traders 3.37 days to recover their short positions on average. Why short interest matters? Short interest is the number of shares that have been sold short but have not yet been covered or closed out. Short selling is when a trader sells shares of a company they do not own, with the hope that the price will fall. Traders make money from short selling if the price of the stock fails, and they lose if it rises. Now, a bit short interest is important to track because it can act as an indicator for market sentiment. And towards this particular stock, an increase in short interest can signal that investors have become more bearish, while a decrease in short interest can signal they have become more bullish. Now, Caterpillar short interest graph for 3 months, as you can see from the chart above, the percentage of shares that are sold short for Caterpillar has declined since this last report. And this does not mean that the stock is going to rise in the near term, but Traders should be aware that less shares are being shorted while comparing Caterpillar's short interest against its peers. Comparison is a popular technique among signals, analysts, and investors for gauging how well a company is performing. Now, a company's peer is another company that has similar characteristics to it, such as industry, size, age, and financial structure. You can find a company's peer group by reading its 10K proxy filing or by doing your own similarity analysis. And according to Bazinga Pro, Caterpillar's peer group pressure for short interests as a percentage of float is 4.85%, which means the company has less short interests than most of its peers. Now, let's expect that at the point of this resistance reach, we might see something like this, a retracement down to at least 229. 229.12, which is at about 20%, 20 pips to 30 pips on that point, of course, which is good money. And that's our technical analysis on today's commodity, Caterpillar. I'll make your host, Nick. Bye for now.